Trading can feel so overwhelming, but it doesn't have to be. I'm going to make it more simple for you. In this video, I'm going to show you 2 things that you need to focus on and you can become a master trader. The first key metric to focus on is volume. What exactly is volume? Volume is like gasoline to a car. You cannot go forward without gasoline. And that is the same thing as buyers in the stock market. If you don't have buyers, the stock price will not move up or down. If you don't have gasoline in your car, you're not going to be able to go forward or backward. So what exactly is the volume when it comes to the stock market? It's the number of buyers and sellers or the transactions that are happening that day. So if you have 100 shares that are traded per day of X stock and you get 10 shares that are traded in a day, that's 10% of average volume. So the question becomes, how do you track that? How do you see that? And I'm going to show you right here on my chart. So here we have NVIDIA. And truly, it doesn't matter what stock I pull up here. I just want to give you an example. So with NVIDIA, you have all of these red and green bars on the bottom. And that is what I use as my volume indicator. Some days you see there's more volume than others. Some day it's red, some day it's green. What does that mean? Well, look at this chunk right here. That means that there are more buyers than sellers on those particular days in the stock market. Now you'll also notice down here, there were not as many buyers as when you look at the rest of this time frame. Now, what is this yellow line that I have right here? It is a very important line that I like to keep on my chart at all times, and that is my average volume indicator. So what it is taking the average volume over the last 30 days. That's what I set it to. You can set it to the last year, the last 5 days, whatever works. But for me and my rules, I have found that the last 30 days is the most important number to focus on. And that basically takes the average volume over the last 30 days, averages it out, and gives me this line. And then it shows me the volume bars day to day in relation to that average volume. So you'll notice back here, there was a time frame where a lot of days in a row, about 5, 6, 7 days in a row, we did not get to average volume. What does that mean? As a trader, I look at that and say, I am not going to be trading on those days, or I'm going to be a little bit more apprehensive to trade on those days. Why? It's the same thing as the gasoline in the car. If I'm not getting a lot of fuel to the stock market, fuel to that stock to drive the stock price up, that is not going to give me the best opportunity to make money. Conversely, when you look just a few days over, you notice that we have a lot of green in here, a lot of buying, and not only a lot of buying, but this day has more volume than this day more volume than the previous 2, this day more volume than the previous 3. And what does that coincide with? The stock price moving up with me because it has energy. It has buyers in the market that are pushing that stock higher. Without buyers, your stock price is not going to go anywhere. A lot of new students say, every time I buy a stock, it doesn't go anywhere or it just goes down. Why is that? Well, a lot of them are missing a key indicator looking at the volume, seeing that there's not enough energy in that stock to drive that stock price higher. So when you look at this and you say, well, why was there low volume in here? Low volume can happen for a multitude of reasons. Maybe there's some big economic data happening where the market is just kind of chilling out. Maybe there's some negative news on the stock and people just don't want to participate in it. There's so many different reasons where you could have light volume on a company. Doesn't mean that you don't pay attention to it. On the flip side, let's go to a company like Discover Financials. Discover Financials was just said to be bought by Capital One. And what do you notice about the volume down here? Well, it was around 3 million shares traded per day. And then all of a sudden, boom, you got a big day of probably 20 million shares traded. Now, news drove that. And that when you see big bars of volume, there's 2 things that I want you to think about. Number 1 is earnings. Number 2 is news. It's very likely that earnings will spike up volume and so will news. Now, what do you do on those days? That to me is like a very flammable gasoline to a car. You do not trade those days. It's dangerous. It's volatile. Things can go bad very quickly. So for me, I like to look and say, let's get our volume to average, just above average volume. I don't want to see those anomaly spikes that come out of nowhere because those often reverse on you. That's when people buy, stock price falls back down and they go, I don't understand why I lost. I bought on good volume, but the volume was erratic. It was abnormal, and that's usually not going to hold up. The second important thing for new traders to focus on is the trend. You're going to hear me say this over and over and over. The trend is your friend. Now, let me tell you a little story. I have a very good friend who trades one ticker symbol. It's SPY. That's all he trades. And he does two things. He has two indicators up on his screen. He has the trend, which I'm going to show you in a second, and the volume. And that is it. And that's what he trades all year. And he has been trading for 30 plus years, one ticker symbol, and it's what he does for a living. It's absolutely possible if you just follow these two important indicators. When it comes to trend, we have to think about one thing. What is trading? It's all about probability. In a previous video, I said that you have to be willing to accept that you are going to lose in trading. And the trend is able to help you with that. You're able to look at a trend and say, okay, I have a higher probability of making money right now, and that is what it's all about. So here we have a chart, and it's a perfect example of what a trend can do. If you follow your trend and you accept that it's going to be your friend, it's going to give you the highest probability of making money. This is Abercrombie and Fitch, ticker symbol is ANF. This area between these red horizontal lines is called the sweet spot. Why do I call it the sweet spot? It's the area where you have the highest probability to make money. It's not a guarantee, but it's the highest probability that you're going to make money. So you buy your stock when your two stochastic lines or your two trend lines are between the sweet spot, and you just ride it. And you just ride it. And as soon as it gets into the overbought area, which is the area over this red horizontal line set at 80%, you just let it go. And it's going to squiggle back and forth, and it's going to squiggle back and forth. But as you can see, what's happening here is it's squiggling back and forth. The stock price just continues to go higher and higher and higher and higher. Why? Because the trend is on your side. It's a combination. You have the volume is on your side at the same point. There are so many buyers in that stock right now, and they are just pushing that thing higher and higher every day. So when you combine those two things, you are going to have a really good opportunity for making money. And to me, this is like a cheat code. When do I buy? I end up buying when my red and yellow lines are in the sweet spot. And when do I sell? I end up selling them when my red and yellow lines drop below 80% and move out of the sweet spot. It's pretty simple. Now, obviously, looking at my chart, there's a lot of other indicators that I use. There's a lot of other patterns that I talk about in other videos. But when I mastered these two specifically, this is when I turned the page and became a really great and consistent trader, which is the most important thing when it comes to trading. Now, to learn about other patterns, to learn about my other indicators that are out there, click the subscribe button and ring the alert bell, because I go live every Tuesday and Thursday at 10 a.m. Eastern time, live trading. Plus, you'll get notified of other videos that come out in the future. Have a great day.